and it only gets worse from there. I mean, the next one's 0.3 and the next one's 0.24. And as we go down into some of the more exotic pairs, yeah, it's not looking great, guys. We haven't really moved anywhere. Look at the Aussie NZD, for example. Good afternoon, ladies and gentlemen, and welcome one and all to the Markets Now session today. Good afternoon to everybody, UTC traders. Good afternoon to everybody out there on YouTube as well. Good to see you guys. Hope you're all doing well today. Got a nice turnout in the room here. Hey, Kai. Good afternoon, Jack. We got Ali, Scotty D as well in the house. Kai, Max, do you know the USD yen trade that was posted? Does it require a BCR? I think it does, but just checking. Also, should we be trading this before the US news event this afternoon? The USD yen trade, the long, was a no. It wasn't the USD yen, was it? It was the NZD USD. It was required a break close and a retest for the short. Was it not? Hang on a minute. I can tell you exactly what it was. Yeah, I don't think that was a BCR. This was the USD yen was a breaker structure long, and that was because we were looking for the market to dip down into big liquidity first. If you recall, this is the big primary point of the daily inflection, where all the commercial players are hanging out. Death territory for retail traders. We were looking for the market to come back into this officially complete the retest. And then we were looking for the next leg of the move, which is the continuation to the upside. And that was simply via a break through the floor of this intraday area of price equilibrium. So, yeah. And if I didn't say that originally, that is the plan now. That's certainly going to be the trading plan now. Yeah, that is what I was looking for, really. So long as we're trading alongside the commercial money here and we're not going against the grain, then we're absolutely fine. I tell you what, though. Let's throw a quick question out there to you guys. We've got a really good group in the room at the moment, so let's throw a quick question out there. If I wanted to take a short, what would the entry criteria be for that? So we know what it is for the long, but what would it be for a short? Right on. Yeah. Yep, right on, guys. That's exactly right. And why? You've all got the answer right. Why is it a BCR? Let's get some more answers in the room. Major area liquidity, yep. Great level of change of hands, Kelvin, yep. In a really simplified form, though, the first answer is absolutely the one that I'm looking for. The trend is up. A BCR is going to give us that extra level of security, that extra level of confluence to add to a trade idea if we're trading against the grain. But this trend is up. We've got a series of higher lows, higher highs. We definitely know the market is bullish at the moment, the US dollar versus the Japanese yen. If we want to go against the grain, you want to swim upstream, we need that extra layer of security in place for us to do so. So in order to go against the grain here, we can see that this is the previously used point of liquidity. It's a big one, as Nadia has clearly outlined there in Kelvin as well. Really big area, change of hands, lots of commercial interest. We need that break close retest in order to get the short. As far as the long's concerned, though, what have we actually had? Let's highlight this point here, right? So let's have a look at the price action inside there. Now, it's not always absolutely clear on a 15-minute time frame, but we can consolidate things on the daily, and I will in a moment. But what is that inside the circle? That's right. Yeah, it's a BCR, isn't it? Yeah, you're absolutely right. So if we head up to the daily time frame, let's consolidate things. Go up to the daily, get a nice clear picture of things, and look at that. We've got ourselves an absolute beauty of a daily break close and a retest. So the BCR is essentially already done. And what we're doing here is we're going down to the 15-minute time frame to fine tune that entry, to get that nice key entry for the continuation for the next leg up. So this is a pending order anyway. This USD versus yen. We don't have anything to, we don't need to stress about it. It's been in the market for a little while now. It looks like it may actually go for it whilst we're on stream today, which is great. Hopefully it's going to be a winner. So yeah, so that's that. Good answers as well, guys. Yeah, good answers. So as I said, good afternoon to everyone. Hope you're doing well and having a good day out there today. The markets at the moment, for a recap, have been, I would say, probably a bit itsy-bitsy. It's been a bit sluggish. Still really looking at a bit of a lack of trading volume coming through the doors at the moment. Not really seeing those nice, big, consistent moves. We've had to deal with a lot of the chop, unfortunately. Now, positions like this, for example, we got this NZD USD. It's just kind of moved, well, honestly, nowhere really. NZD CAD, very much the same thing. We've had a couple of decent moves, like this one here, for example, was quite nice at about 1:30 in the morning GMT, so well out of our trading hours. But nothing's really triggering yet. Not of the big moves. Oh, that's odd. What the? I don't know what happened. Our pound yen short was decent, by the way. We got a break close retest. I have no idea what's happened to the trade idea though. So the original trade was a 1 to 2.45. So that would have been about there for that GJ short, which was not bad. The Euro NZD up here was a breaker structure trade. I think Trading Views had a little bit of a meltdown here, hasn't it? The trading opportunity is there, but this was a stop out. I have no idea what is going on with these trades. All the panels have gone wacky for some reason. They've all been squished. But ultimately, the trading opportunity was about that for a 1 to 2.15-ish, something like that. But we actually came up, triggered that overnight, and went straight back down to stop loss within the same candlestick. So that one was there. That was on the rollover. We got caught out on that one. A little bit of a shame, but there you are. We've got the Euro Oz at the moment. This was no actual fixed trade idea, but more of a recommendation to trade. And we were looking at the potential for this one triggering. It did trigger here, but still I had not posted the official opportunity out. I still like the Euro Oz. I think it's definitely got leg. So it's definitely got legs to go. I just don't know if it's going to be today. I'm still holding fire on this one. Just a little bit. Due to the nature of the markets right now is what I would say about that one. I'm not entirely sold. We've got the steam in these markets at the moment to see that continuation back up to 179. And then we had the Aussie CAD. This is really annoying. I don't know what's happened to all my panels here. They've all been squished for some reason. But we did take a loss on the Aussie CAD as well. So forgive me for I have no idea what's going on with these stupid things. But we did take a loss on that AC as well. So that's really annoying. And we got the nice little breakout. Good breaker structure. It might have been any of these candles, to be honest. I'll have to check my MT5. But ultimately, the trading opportunity was about there for a 1 to 2.9, maybe a 1 to 2.95 actually for that AC short. And that one was there. So that's what it looks like ultimately. And it's not gone anywhere since. So, it's not even like we've had some sort of mega turning point and lovely bit of volatility coming through. We just haven't. At the end of the day, the markets haven't done anything yet. And we're on Wednesday now. I wanted to say we're on Tuesday. We've still, it's fine. The markets are still sort of churning and burning. But right now, I'm not seeing bloody anything at all, really, from these FX markets. If we look at the change here, we have a look at the screener quickly. You will see that your most extreme moves today are the pound against the CAD for 0.35. So naturally, you look at the growth. So pound CAD is the largest mover today on our charts at 0.35%. And it only gets worse from there. I mean, the next one's 0.3 and the next one's 0.24. And as we go down into some of the more exotic pairs, yeah, it's not looking great, guys. We haven't really moved anywhere. Look at the Aussie NZD, for example. That's the Aussie NZD currently. We are actually getting a little bit of momentum now as we come into the US FX Open, which is at 1:30 stream time. But this is what the Open has amounted to so far, and throughout the Asia session, which is always predominantly the big trading session for the Australian dollar pairs, we are not seeing anything. We haven't had anything at all. We had a bit of a strikeout on the rollover, and that's it. It basically corrected itself, came right the way back down to where we were trading all day yesterday, and is currently at 114.90, having a little tiny bit of open pressure, but that's about it. So it's really lackluster at the moment, team. Really lackluster. There's not a great deal more I even want to add necessarily. I've still got the Euro Oz on my watch list. Good job we didn't actually go for that one in the end. It's coming down now. So that one's still in our watch list. For those of you who are the Wednesday joiners, maybe not full UTC members yet, that's fine. The Euro Oz, you are more than welcome to, have this in your watch list as well. What I would say though, this is not a full-blown UTC portfolio position. Okay, so if it is, you must know the difference. Those of you who have been joining in, even just on the Wednesday sessions by now, this is not a portfolio position. This is more in the watch list. If it does trigger, then I'll be happy to post that one out, officially. But right now, I'm expecting there to be the leg up to 179. It's just about timing and when we want to be ready to go for it. Because at the moment, I really want to stay clear of a lot of this ranging mess, because it's the best time to blow money. It really is. In these markets at the moment and all of this kind of price action, it is by far the best time to take on some losses. So it's better just to stay clear of it. Now, as we work our way up, let's have a look at the metal markets then. Precious metals at the moment have seen, I would say, a very similar context to the FX space, where we have a lot of political uncertainty, economic uncertainty as well, really shaping the market sentiment here, as we can see in this safe haven to the United States dollar. That being said, actually, ladies and gents, it is worth a quick shout out to say that the DXY is currently trading at 100.247, which is exceptional. Now, if we can break this high, as I mentioned, get a breaker structure outside of the top of here, we will need the retest as well, of course. But the next point from there is 101.70. So we seriously could be. This is the final stand now, okay? You imagine this is sort of the castle wall. This is the ramparts. We're right there. It's the last stand. And if we breach this area, we start the next bullish wave. This is a huge predominant level of commercial interest in the DXY. This one right here, okay? I've made it nice and big and wide to lack of, so we don't have much of a margin for error here. I mean, sorry, we have flexibility. We have a bigger margin for error. But ultimately, if we can bust our way through here, it opens the doors up to 101.70 and beyond. Now this in tow will have gold trading sub 38.50. If we trade sub 38.50 in gold, we could see per ounce back down at 37, which is a big decline. I mean, that from the highs then will be, let's just measure this out quickly, from the highs down to around 37. That's going to be a 15.6% decline in gold price, and it could continue from that point on as well. It most likely will. So we have to really consider sort of where we're at with this. It's shaving off a lot of retail money at the moment, which is great. Get rid of some of the dead money. Then we can buy back in when the commercials are ready to take off, and we can be using the DXY as an early warning indicator for that play. So that's really where we are at the moment. In terms of intraday opportunities currently, like as in, is there anything we can take today that we feel good about? Again, I'm probably leaning on the fence here, guys. I really am. There's just not the movement for it. We've had a lot of this. Do I want to be having money wrapped up in silver for, let's say, 6 hours at a time and not achieving anything at all? No, not really. I could probably look past a bit of ranging mid-market, mid-trade for a push up to one of these levels, but I haven't got the confidence in the market for it to be able to do that at the moment. So it doesn't make sense. Logistically, it just doesn't make sense. Not right now, not yet. So that'll be that. and into the energy markets then, which I would deem to be the most exciting at the moment, and that is only, oh, for God's sake. What is going on with these? Hang on a minute. Stop loss is at 3192, wasn't it, on that one? 2. So far in natural gas, this is, I mean, at the moment it's our trade of the year, which we always try and do a trade of the year. But currently we're at a 1-to-9 risk reward ratio on the natural gas trade. So that's as it. No, we're not. No, we're not. Hang on a minute. Wait. Hang on, guys. Let me pull up my MT5. Hang on. Okay. We are there. So that's there. Right. So we're currently up at a 1-to-6.5 on natural gas. At the very high of the move so far, we are at a 1-to-7.7, which is fantastic. And yeah, it's going really well so far. Stop losses are in the market at 35.75. It's going well. it's going very, very well. And yeah, I don't really have anything more to comment on at this stage, apart from the fact that, as I mentioned yesterday to the UTC traders, I am the new weatherman, and that's what I do. Quite a lot of the time, I look at weather forecasts, short-term, mid-term, and long-range weather forecasts for the winter season in the United States, and that's what we've got our money in. Yeah, so yeah, not only are we traders here, we are also the weathermen. So if you want to know anything about US weather, please hit me up, because I'm an absolute ace at being able to tell you when it's going to be raining now, or snowing in their case. So far so good on that one anyway. There's not much more to say. Looking at the daily time frame, we've got some really solid structure coming through here as well. Things do not look overextended. They look quite controlled. We've had a bit of indecisive daily candlesticks, but ultimately we've broken through some pretty significant points of liquidity as well. If I just copy and paste this area and bring it up to where the stop loss is, for example, this is a really nice big point of liquidity. We've got a huge breakout out above it now as well. So I would be anticipating over the course of maybe the next 72 hours, possibly, to get a daily retest of this level. And then for the continuation, the next point of call is, of course, the nice peak high, which took place in June of this year. One of the hottest months in the US. That was due to Recon demand, creating the natural gas rally there as well. Of course, alongside the geopolitics, which created a bit of a demand vacuum for NG as well. But from that point on, we get the break above that. I would really like to think that as we approach January, February time in the US, we will be looking at around this level in here. This will be about end of Jan, beginning of February, at around 44.50, 45.57, and then hopefully into March, possibly reach 48, which is where we will look to complete on the position. Now, ultimately, you know, we're very hands-on with this position. We're managing it almost on a daily basis. The stop loss is being pulled in behind the trade constantly, and it is being, you know, maneuvered as and when. But it would be nice to end up with at least a 1-to-15 to a 1-to-20. So getting a 20x return on that opportunity, yeah, would be pretty sufficient. I think be quite nice, especially start the next year with an absolute bang. So that's that one. Next up, we've got, of course, UK Brent. Now, I've had a couple of trading opportunities on this one ready to go. Again, just like the rest of them at the moment, these are not officially loaded up into the MT5. They are pipeline orders that we are looking for access points to over the course of, you know, the next few days. This one's been running, well, the analysis for it has been out there and available for a couple of days, and we're ultimately looking for the break of structure down at 63, 62 for the push into big liquidity at below, and that's down at 60, 80. But honestly, team, just like almost everything else right now, we've seen nothing but ranging, and it's been that way all week, and for the predominantly last week as well. So from the 28th of October, we broke, we came up from the lows, we hit the highs, we came back down, and now we've just been running sideways the entire time. So we're really waiting for the next, I would say, fundamental point, really. There needs to be some kind of fundamental point that generates the demand. OPEC Plus at the moment isn't really giving us anything. We need something that's really going to shake things up, whether that be an oversupply case or an over demand case for the leg up or the leg down. We don't know yet, but we are positioned either side of the market, ready for that. Break close and a retest for the long, and a break of structure for the short. We just need to sit tight, bide our time. We're going to have weeks like this. It's trough week. It's been a bit of a trough 4-week period now, but yeah, we have to sit on our hands. We got to be patient. So that's that. And then finally, moving into today's action class, the US indices, where yesterday was so action-packed. I took 2 losses on the US 30 Dow Jones back-to-back and a win in our S&P 500, I want to say. Was it in the S&P? Yes, it was. So I took a long in the S&P for a 1 to 2.16 and took 2 back-to-back losses in the US 30 Dow Jones. I've left them open for you as well for review. Took a break of structured trade, got a really bad fill. I actually took the trade up here, like right on the cusp of the break of structure. And yeah, I got a fill all the way down here. It was not bad anyway, because it still yielded a 1 to 2.42. We got just above target profit and it came back up and took us out. And then I waited and waited and waited throughout the no man's land. We got a break close and a retest. Really nice break of structure. There's a really solid spread on this one yesterday as well. Got some pretty precise execution on it. It ranged pretty much the entire time and then took me out on that one as well. So yeah, that was that was the US Open yesterday. Bloody complete waste of time, really. But there we go. It's not actually achieved anything since then either. It's just ended up chopping between the long breaker structure and the short breaker structure. I mean, ultimately, we are exactly where we were yesterday, which doesn't really fill me with a great deal of confidence. Agency, will it rain today? That's a great question, bud. It depends where you are. If you're in the UK, absolutely, it's going to rain today. Absolutely. Calvin, I can see it. I can see you questioning it, so I will let you finish the question. Let's have a look at the NAS 100 quickly. I think I would prefer to trade something other than the US 30 Dow Jones today, simply because of the available margins. So the NAS 100 at the moment, that's pretty nice. We've got a high in there. Let's have a look at the 15. Grab some context here. Yeah, so that doesn't look too bad at all. Actually, that looks really, really nice. I like that level there as well. And then, of course, I like the immediate margin above that. So that would be our long trading margin. So what we're looking at today is a potential long in the NAS 100 between these 2 points, with our stop loss tucked in nicely behind the margin. That's going to give you around a 1 to 2.24. You will be able to increase this and look for more precise levels on the 1 minute time frame. Rest assured, that one will come down to there. This one will inevitably be risen as well. We actually don't need that so wide. So for example, this will be coming right the way up. Look at that risk reward ratio, comes right in then. Looking at the shorts at the moment, this is actually not looking too bad either, team. So the short target, probably going to look at that level in there. Then you'll be looking to take the short below here. Target profit and stop loss. That's a bit of a hairy one, that one. You need the low where it is, and you need the high where it is for that zone. Let's go down to the 1 minute time frame, see what we can find. Let's drag this one along here. Okay. So this is why looking at the finer print is so important, because of that there. 1, 2, 3, 4, 5, 6, retest, continuation. So even though it's good and it's prudent to have a nice big wide zone on the 15, you can really iron out the details on that 1 minute time frame, because you realize you don't actually need your stop loss to be so wide. So you're looking at the target profit at around 25.32. Your stop loss is going to be up there at around 25.475, and you're going to get yourself a 1 to 2.72 out of the back of that. So NAS 100 today, that's going to be the one, I think. It looks pretty decent right now. S&P 500. I've actually got the same thing. That was from yesterday, wasn't it? I don't necessarily like the setups that are available on the S&P, especially not for the long. I think I could probably handle a short. No, I couldn't. Because if we break down there, we're instantly interrupted by this. So really, the trading margin today on the S&P is going to be between the low and the point of inflection. And that's a hell of a long drop from where we are currently at 67.88. So no, we're not going to do that. No, we're not going to do that. I think it might be an incredibly rare instance where we only have one US indice to trade based on the available margins. The NAS 100 is a clear winner. The structure, everything about it, it's very clean, very clear, very simple. US 30 Dow Jones is a murder scene right now. We can't trade in here, absolutely not. We'll be completely ignoring this really big inflection point, so we just can't do that. We've got the lows down here, which has been disavowed really yesterday. The market was coming through it over and over again and not really adhering to it. If we bring down the breaker structure point to that level there for the short, then that's a hell of a long way for the US 30 to work through before we even get there. If you want to take a trade between there and there, then you are going to run a load of technical risk factors, one predominant one being about there, and then that makes the trading margin above too small. The long looks a little bit more clean, but again, we did the same thing yesterday and it failed. It actually had a second attempt and failed, which I didn't take. It's just not looking good, guys. Really not looking good. Nothing we can do about it. So we're going to have to give that one a pass today. The S&P 500 is a little bit more clear, but it still comes with significant TRFs that we just cannot avoid. So I think the NAS 100 is really where the magic's going to happen today. Kelvin, let's have a look then. Kelvin says, take a look at the CAD Swiss for long term. It seems like a change of structure and direction. The NAS made a retest on the big time frame. Yes, and a continuation thereafter, or so we hope. Let's have a look at the CAD Swiss. So long term, 4 hour to a daily. Let's grab some context. And it seems like it's made a change of structure and direction. Okay. Okay, let's have a look at the more defined point here. So we've got good sound trending market to the downside. We've broken structure. We're coming back for a retest. I don't know, man. I don't know. Sorry for the silence. I'm just kind of like getting into it. I'm not entirely sure. I would be at the stage currently of saying that this is a change of structure here, that we're going to be going for the bend at the end of the trend, so to speak. I'm not entirely sure. We've had instances of this before, quite a few in actual fact, and it's always continued to trade to the downside thereafter. I tell you what I can do though. I can certainly tell you what I would be looking for a break above in order to anticipate the change in the trend. Actually, not even that. I think I would be looking for an official change in the trend once this level here is broken. Now that might seem crazy because by that point in time, the market could have been trending for 3-4 months in order to get there. But ultimately, that is what I'd be looking at. So if you're looking at a bearish market, let's go to the weekly time frame just to put things in perspective. The CAD Swiss has been trending down since 2007 in the financial crash, right? The financial crisis. I'm not surprised, ultimately, because economically speaking, the Swiss and its role that it plays in the G10, it should be continuously gaining versus a commodity currency such as the Canadian dollar in the economic cycle that we've been in for the last 15 years or so. So that makes sense from that matter of fact. But this level that we've seen in here, which was there, that low, if we can get a break out above this level, a good solid break of structure above this level, it would then pave the way for a move up to 63.58 and beyond. And at the moment, we are just trading lower. It doesn't. I mean, this is the ceiling for me. Let's have a look at this, Kelvin. Let's have a look at your chart here. So we got CAD Swiss on the daily. You're looking at a break, close, and a retest above the. Yeah. So let me leave my area in there, and let's say looking for the BCR above here, right? Because that is the most sort of immediate point of liquidity. So that looks great. That it does. It absolutely does. The only thing that I would see then is we've got this. This is the main point of inflection, right? This area inside the red circle, not this. Because look at the shape of the price action pullbacks that we've had. The asset value here is at 58.03. The asset value in here is at 60.54. The asset value in here is at 58. And the asset value in here is at 58.89. A very, very minor move in comparison to the big commercial move that we had just prior. So for me, this is more of offloading in comparison to the first wave of the move, which makes this level up here the one to really pay attention to and watch out for. But not only that, if you want to take a long above this level, you are going to be directly in the midst of this, right? But then you can't take a long above there because you're going to be directly in the midst of this. So now we're actually up against multiple tiers of bullish defense, or defense against the bulls, right? We're the bears in this market, so this is going to be, you know, bearish defense. And so the clear trading margin really is when the market decides to break through. Oh, trading views bugging out a little bit. So the clear trading margin is when we get the breakout above 59.26 for that margin run up to 60.31. That's the sort of the path of least resistance that we're always looking for. Now, if we go down, if we scale out on the time frames here and we look at things on a 15-minute time frame, you will, without a shadow of a doubt, be able to work out trading opportunities inside these margins. Absolutely. I'm not saying there's no trading opportunities in the CAD Swiss until there, but from a long-term perspective, we cannot say we've officially changed direction until we get the breakout above 60.50. In my completely humble opinion. Yeah, no worries. Yeah, no problem at all. I swear there was something else I was going to say. Oh, you asked about Edgewonk as well. Edgewonk, if I remember correctly, that is a trade journal, I think. And no doubt nowadays, something to do with automation as well, rings a bell. I mean, I can't say, look, you know, I don't really fall into the trap of being what do you call people who sort of recommend things? I can't, a reviewer. I don't know what they call them, but yeah, I don't really get into the habit of reviewing or recommending third-party services on here. I just find it best to keep myself completely clear of it because, well, for the obvious risks. I have heard good things about it from people who have used it over the past, and that's about all I can say. It seems like a legit business. They've been in business for a while now. It seems like their product is pretty good. I guess I would say, what's wrong with an Excel spreadsheet? You know, really, I don't know. Maybe I'm a bit old-fashioned, I suppose, but yeah, doing things the old-fashioned way, even bloody pen to paper, mate. You know, nothing wrong with that. Yeah, exactly. Yeah, that's my point. Yeah, that's my point. Right, team. Well, listen, it's what are we at? 6 minutes past 2 at GMT. I hope you guys. I'm basically going to wrap things up there. I don't really have anything more to comment on at this time. Of course, don't forget everybody in the room and joined in with me right now that it is NFP Friday this week. I am looking forward and ready and raring to go for the big NFP live trading event, which is going to be taking place at 1 p.m. GMT on Friday. So that should be a good laugh. The only risk to that, and please do pay attention here, there is an actual risk to that. And we've already had a data release taken away from us this week. So there is quite a strong possibility that the NFP will be removed. I'm going to keep the event open and sort of going for now, but there is a strong possibility that it'll have to be removed. It isn't showing on your calendar. It was this morning. Hang on a minute. I haven't even checked this afternoon, bud. Still showing on here. Let me just double check my actual calendar. Hang on a minute. Let me just fire up my trading engine. Hang on a minute. Ah, yeah, you're right. Ah, man. Yes, you're right. Yeah. Oh, no. Wait, hold up. Hold. Yeah, no. Yeah. Oh. Well, that's great. What should I do then? I think from as we've seen things so far, they can open up for releases. They can open up for releases a very early start, like, last minute. I know last time we got the data out and we only had 24 hours warning. So I think what I'll do is I'll leave the event up until tomorrow afternoon. We'll get our session done then. If it's still showing as a no-go tomorrow afternoon, then I will have to cancel it. And it's a real shame. But it's just one of the various market dynamics that we really have to be adaptive to at the moment, isn't it? It's annoying, it's frustrating, and it's definitely going to be having an impact on market volume, isn't it? With all the US uncertainty that we're dealing with. So let's just see how it goes. And we'll go from there. But nevertheless, I will be on Friday morning regardless, and I'll do the end of week recap. All right. So, as I said, guys, I'm going to love you and leave you all there. Have a fantastic rest of the day today. Good luck to you out there in the US Open. It's been a pleasure joining with you today, and really like the engagement and everything that we've been up to in here today. It's been really good fun. Take care of yourselves. If you need anything at all, any questions, anything at all, then please don't hesitate. Fire it out. Send me charts. Send me things to look at. I'm always here. The door's always open. So utilize it as best as you can. And let's see what we can do. So take care, team, and I'll catch you later. Bye-bye.